What are leveraged ETFs, and can using borrowed money allow us to become rich? Let's get straight into it. So in the past, I've had subscribers ask me, why don't you just put your money into leveraged ETFs like TQQQ and get much bigger returns than just investing in the triple Qs, which is one of my largest positions in my portfolio. So let's talk a little bit about what TQQQ is. It's a leveraged ETF. So they are run by ProShares. They are using borrowed money to amplify returns. They are going to be tracking the index like normal. In this case, they're looking to track 3 times the daily performance of the Nasdaq 100 index before fees and expenses. It is important to note, though, that the return is for a single day. So they're trying to get 3 times the return of the underlying index for a single day. And that is much different than a lot of other ETFs. We'll get to why that's so important in just a moment here. So they're either going to use borrowed money or they're going to use derivatives like a stock options or a futures contract. So this is going to give exposure to the full underlying investment without necessarily needing the full capital right away. That's what allows for those amplified returns. So when you see those 2x's or 3x's, depending on the leveraged ETF, that means they're going to be providing 2 to 3 times the return of the daily performance of the index. Now, TQQQ has been around since 2010, and because they're a leveraged ETF, they have much higher fees than standard ETFs. We can see here TQQQ has an expense ratio of 98 basis points. That's pretty expensive. That's $98 for every $10,000 invested. Their assets under management is around $18 billion. So because they are only tracking the daily performance of the fund and not yearly, what's going to end up happening is the days when there is a huge downturn, it's actually going to take them a much bigger green day for them to recover. This is because the loss on the leveraged ETF will be more significant. So on a day when you lose 2%, but then later gain 2%, you're actually not back to where you started from. That's because of the daily compounding of the gains and losses that are being calculated based on what you have left, not your original amount. So let's use an example here, right, guys? Let's say that we started with $100. Let's say we have a down day. Now we're down 2%. We're down to $98 now. But then let's say the very next day we have a 2% gain. Does that mean we're back to $100? Actually, no. Instead, it's going to be 2% of 98, which is actually $1.96. It's not 2% of $100 anymore. So we're actually getting back only $99.96. Obviously, this was a super small sample size and super small amount, but with large amounts of money over long periods of time, you can see how this can really start to add up. That's why these investments are typically designed for short-term investing. The longer you hold on to a leveraged ETF, the more likely you will experience one of those days with huge losses, which get amplified with leverage and aren't going to be able to recover as easily. This has actually gotten so bad that both the SEC and FINRA actually had to issue warnings because the everyday common investor did not understand this concept. Guys, the SEC website has numerous explanations going over why a leveraged ETF is not the same thing as just buying and holding an ETF and the massive risk that come with holding it. Just look at TQQQ right before the C19 crash. It was trading at nearly $30 a share. Then fast forward just 1 month and it was trading at just $8 a share. Imagine losing 66% of your net worth in 1 month. That's why ETFs like this, they're intended for short-term trading. They're not intended for the long-term investor. For most long-term investors, just buying the underlying equity will result in better returns. However, TQQQ seems to be built differently. It's actually up over 105% in the last year. Year to date, it's up 124%. And in the last 5 years, it's up 188%. That easily outpaces the triple Qs, which are at 41% and 177%. And over the last 5 years is up 177%. You can see how assets like TQQQ can rapidly grow wealth, but they can also erase wealth quickly too. Just 2 years ago, TQQQ was trading at nearly $90 a share, and it lost half of its value in less than 2 years. So those investing in this really need to be able to stomach and swallow those large losses. Here's what I think are some of the best ways to play TQQQ. It's really meant for the short-term trader, similar to day trading, quickly getting in and out of those positions. It's also intended for those that are attempting to time the market. Those who are really good and bought at the bottom of C19, man, they got rewarded really well. They were heavily investing into TQQQ at the bottom. Imagine how much money they made. If you think the Nasdaq has been oversold, this could be a reason to get into TQQQ. However, it should be noted that day trading and attempting to time the market are generally some of the worst investing decisions and strategies according to research, so the odds are not going to be in your favor to make money. Just like paying thousands of dollars to buy some course from some idiot on the internet who will apparently teach you how to day trade is also probably going to lose you money. Anyone who has investing secrets like that is not going to be giving away that knowledge, I tell you what. There's also leveraged ETFs that short the market like SQQQ. The ProShares UltraPro QQQ seeks daily investment results before fees and expenses that correspond to 3 times the inverse, that's negative 3x of the daily performance of the Nasdaq 100. This is for the investor who is bearish on the performance of an index. So when the Nasdaq goes up, SQQQ is going to be going down. When the Nasdaq is going down, SQQQ is going to be going up 3x. But just like TQQQ, these are intended for short-term trading because the returns are being compounded daily. Also, just keep in mind, throughout all of history, the stock market generally goes in an upward direction. So you have to be a real degenerate to hold these for the long term. That's why in the past year, SQQQ is down 67%, and in 10 years is down 99.93%. That means somebody who has been holding on to SQQQ over the past 10 years has lost nearly their entire investment. To my long-term dividend investor subscribers, the regular triple Qs is such a powerful investment. It can easily build wealth over the years. It's a great complement for the younger investor who wants to invest in dividend stocks, but also get exposure to the hottest growth stocks that are building that innovation for the next generation. I'm talking companies like Tesla, Google, Microsoft, Amazon, Nvidia, Facebook, Adobe. You get exposure to all these and more, 100 different positions in the most innovative companies in the world. That's why I make the triple Qs about 7% of my portfolio right now. It's a huge reason why I'm actually beating the market this year. I needed that big boost from the big tech companies. Nobody likes to pay taxes. Big capital gains with the triple Qs actually avoids taxes until you actually sell your investment. So if the stock price just keeps going up, and as long as you don't sell, you won't be paying taxes other than the dividends that get paid out every quarter by Invesco, the fund managers of the triple Qs. That dividend isn't super high, right? We're giving up some of those high dividend yields in return for high growth. Now we can still have great dividend funds like SCHD in our portfolio, and then also have great growth complements like the triple Qs. Life doesn't have to be all high yield income ETFs or bust. So while yes, TQQQ could make you very rich, it could also make you very poor. For me, I like my investments to be passive, and for me, I don't want to have to worry about them in the long run. I like to set it and forget it and then go to sleep feeling real good. I just want to have those dividend checks come in every single quarter, and I know if I do this investing today, do the hard work today, it will make my future that much brighter. I share all my trades for my Patreons weekly and also get full access to my $155,000 portfolio. For a better alternative to the triple Qs, check out this video right here with a very similar fund with a lower expense ratio, so you're going to be saving money in the long run. Be sure to leave a like for the algo, comment what you think about leveraged ETFs. Remember, my videos are always found in podcast form under the Collect Cash podcast name, and I'll buy, stash, and collect cash you later.